What's going on, guys? Mike here, and today is episode 5 of this portfolio reveal. So today we're going to just kind of touch on some highlights throughout the week. But for our new viewers, I'm just going to kind of quickly recap here. This particular series on this channel is to kind of compare my DIY investing to a mutual fund that I used to be in with your traditional bank structure, and I'll show it here right away. So for those of you who are reoccurring, we finally do have the results from last month on how the mutual fund did in comparison to this DIY portfolio. So we're going to look over that. We're also going to look over the dividends I've received this month, in this past week. And also this week is also a contributing week. So for those new viewers, I contribute $185 bi-weekly. So we're going to quickly go over what I purchased and why, and kind of go from there. We're also going to quickly talk about TD Canada Trust, which is a holding I have in my TFSA. There's a number of articles out there talking about how it is the biggest shorted bank in Canada right now. So just kind of want to touch a highlight on that. Also, we're going to quickly talk about my opinion on this whole topic. Maybe you've already heard of it, on the whole China and Saudi Arabia, how they're considering on converting on oil purchases to be used with Chinese currency versus the US currency. So we're going to just kind of touch base on that as well. So without further ado, definitely let's take a look here. So right off the hop here, I just kind of wanted to recap. I ended up missing this dividends here you'll see from XEQT from last week's episode, which is episode 4. I ended up getting just about $56 of dividends from split between my RSP and my TFSA. Obviously, I have a lot more in my RSP, which is why it was substantially higher in dividends. So for those of you who don't know what XEQT is, it is a diversified ETF that is global, right? It's kind of in all the indexes, and it pays out a quarterly dividend. So that's kind of that. So we'll go into that more detail in a little bit. We also received dividends this week from TELUS, which again is only $2.98. We also received a dividend from ZAG, which is my bond allocation in my RSP at $5.40. So before I get into the things I had purchased here, I just kind of want to quickly highlight on my rebalancing sheet here on this Excel. We actually had a contribution of $220 this week versus my traditional $185. So also too, for those who are new, this particular Excel sheet in this Excel document helps me kind of pinpoint how much I should allocate to each of my holdings to retain my asset allocation targets, right? So, with this REIT, I want 10%, so it tells me I need to spend $33 to obtain, that 10% weighting. So, just so you know. But yeah, so we were at, like I said, $220 this week because we obviously did get some dividends from the TFSA here and as well from TELUS. But we also, like I've mentioned before, and I'll link the video here again, I keep my emergency fund in EQ Bank, which has an everyday interest of 2.5%. So it pays out on the first of every month. So I have X amount of dollars in my emergency fund. So I ended up getting $19.56 as my monthly interest. So of course I have it linked to my Wealthsimple portfolio, my Wealthsimple online brokerage. So I just transfer those funds monthly and then I reinvest it into equities or bonds or whatever the case may be. So my equity fund actually doesn't grow in EQ Bank. I just take those funds and I instantly put them into Wealthsimple. So if you're interested in that, definitely check out this video because it's kind of a nice strategy to kind of just get some extra funds into investing. So kind of getting into it, so we ended up buying 7 shares of one of my favorite real estate REITs, which is Plaza REIT or PLZ. We ended up, like I said, buying 7 shares of that in my TFSA. We ended up buying another full share of TELUS. We also got, it says 0, but it's because it was a fractional purchase at 0.151 shares for only $8. Again, it's because the Excel sheet was saying if I want to retain my 5% allocation of Enbridge, you need to spend $8 on a fractional share, which is what we did. We also got 1 share of Power Corporation and 5 shares into XEQT. So again, I actually am thinking about maybe doing a video on this maybe next week on kind of a little bit more of a deeper dive onto XEQT. For those of you who don't know, like I said, what it is a global diversified equity ETF that holds like 9,000 plus equities. So like you're very diversified. And my target allocation in this is 70%, and I hold it in both my RSP and my TFSA. So like in all reality, it would probably be smarter for me to just have all my money into it. And for those of you who are DIY investors now, you're going to understand this, but I don't. I only do 70% because I want to have a percentage of my money that I get to kind of play with. So I'm sure people here can relate to that. But like on top of that, with that though, like I said, I kind of like having the bulk of my investments at least in a professional managed portfolio. And again, but I'm still kind of DIY at the same time because I am still kind of pushing the buy button. I'm allocating what funds go where, sort of thing. So like I said, I'm thinking about maybe doing a future video on that, maybe next week potentially, just a little bit more of a deeper dive onto it and why I chose it. But yeah, so kind of getting into it, like I said, those were the purchases for this week. So getting into the comparison of the portfolio. So this is my RRSP performance year to date. So you can see here, we just have the ending of March 31st. We received $236 in dividends so far this year, and the annual year-to-date return being 4.4%. So looking at the RBC fund at RBF460, like I had predicted, they were going to get closer to us this week, just because they're kind of in a different assets that are more conservative and potentially will do better in these kind of volatility markets right now. So you can see their year to date as of March 31st is 4.0. So they're really quite close to me. So yeah, it's like a little bit of maybe an ego hit a little bit. It's kind of like, I kind of hate how, we're doing this extra work of DIY investing and I'm only up 0.4%. So we'll see how it goes. I didn't share this before, but like last year, before I started doing this YouTube channel, the RBC fund did get negative 12.5%, where I ended up getting a negative 1.6%. So again, one of the things I want to stress is that as a DIY investor, like just because you do good one year doesn't mean like you're a genius investor. I'm not a genius investor. I'm just your average Canadian bi-weekly investor who just likes to take control of their finances, right? So again, if you guys are investing, definitely don't, do your own due diligence. Make sure you are doing what you're comfortable with and not necessarily just taking what I'm doing, sort of thing. But like I was saying though, so like last year it was like a massive spread. This year I'm only at 0.4%. So it's really hard to kind of compare as an investor. It's like you really kind of need like a 10-year span to really know if you're doing well, right? Like, you can see here, the average on this fund is 5.7. Well, what's my 10-year average going to be? It's going to be a while. We're going to all be here for 10 years, and then we'll talk about this video on the 10th year of this channel. So we'll have to remember this. But what I'm trying to get at though is that you can't just like go off of 1 year and just think that you're doing good. Now, in my philosophy of investing, I have a plan. I'm sticking to that plan. If that's the biggest problem with DIY investors, is that they're always massaging their investments, and sometimes that can be beneficial. There's smart times to do that, but a lot of the times you just need to let it grow, right? Like equities are having a little bit of a harder time right now with these high inflation, high interest. So with this particular fund being 40% bonds and I'm only at 10% bonds in my DIY investment, to me it makes sense as to why this is doing better or closer to what I've returned so far for year to date. So just kind of keep note of that. Also just kind of take it, like I said, the constant massaging kind of isn't necessarily always a good thing. And that's kind of why, like I said, I have my Excel sheet where I have my asset allocations and I typically stick to it, right? So one thing that kind of hurt me this week is that you'll notice how I didn't buy any TD Canada Trust. And the reason for that is because I'm at 6% allocation and my target is technically 5%. So last week I did overbuy, the last 2 weeks ago I did overbuy on TD because it was so cheap. Because of course, like they've kind of been in the downward trend. And I kind of just want to quickly show that actually just on this channel real quick. I'm just going to click on my TFSA in my Google Finance, and you can kind of see this is kind of cool when this is like the power of dollar cost averaging. Okay, so you can see here I ended up buying, again, just small fractional shares. It was 0.71. I know it's not a lot. $77, but I'm up almost 3.5% on that. Right now, I did buy at a bad time, last year. And you can see here in March 2022, I bought at $98 was my first stock here for TD Canada Trust. So again, I'm just trying to dollar cost average. I don't have any fears that TD Canada Trust is going to go away or they're going to, fail as a company. I don't have those fears in it. But right now, it's trading at a discount. So again, that's the whole the perks of dollar cost averaging, where you're not just putting I didn't put $20,000 in on March 4th of 2022. I'm just constantly buying. I'm sticking to my asset allocations. And it's kind of neat to see that it's like, okay, I'm up almost 3.5% on that last purchase. Now, I have a far way to go, because if you look on my Excel sheet here under my holdings, my TD Canada Trust, my actual average cost, the sheet is screwing up again. I'll have to refresh it. It seems to be a constant thing when I'm recording. Sorry about that there, guys. Well, hopefully it kind of updates. But I think my average cost was like $90. So I bought at 98. And, of course, it's kind of coming back as, it's coming down as I kind of purchase as we're kind of going down, right? So it's just kind of one of those things to kind of realize, right? So yeah, so sorry, I'll show you the cost here. I got to flip it over from RSP here to TFSA. I'll do that here right away. So before we kind of get into that, I'm just going to flip things over to the past week here. So just give me a second. All right, so we got it kind of updated here. So you can see here that the portfolio was really quite flat on the RSP this week at 0.3%. We kind of didn't really do much, right? So kind of unfortunate. Everything it looks like is pretty much a gainer this week, other than the global ETF, which is XEQT. But VDY went up 1.4. The real estate REITs went up by 2.1. We had our bonds go up by 1.2. And our high interest savings, which went up 0.1. Again, for the new viewers, if you don't know what a high interest savings ETF is, definitely check out this video. I hold PSA, which it just kind of pays out 4.84% annual interest. But yeah, check out the video if you don't know what it is. It's really kind of a nice way to hold some cash instead of just collecting nothing. So that was kind of the update for the RSP. So I'm just going to flip it over to the TFSA. I actually don't know which performed better this week. We'll have to wait and see once it updates. 0.1. So yeah, again, financials hurting it the most, being at negative 1.6. The REITs in the TFSA, which are different from the ones that I hold in my RSP, are negative 1%. And tech actually, so TELUS actually being one of the best contributors this week at 5.1%. That's actually pretty awesome. And Enbridge kind of bounced back from that $50 range. I think it kind of bounced back up to that 52. I think here we'll take a quick peek. So Enbridge being back up to that $52 mark. And TD, like I said, it was my average cost here at $90.92. So as I keep buying, as it's in these low ranges, it's just going to keep lowering that cost base, right? So that's kind of the update there. One thing I also just did want to show too is that in this Excel sheet I can kind of see like monthly performances. So I'm kind of comparing myself to the RBC Mutual Fund, but we're also just going to have a quick peek here. So for the month March 2023. These are the comparisons. So I have the SP500 and I also do the TSX indexes. So my portfolio went up only 0.13% in the March of 2023. The SP500 went up 0.9 and the TSX went down 0.5. So I'm kind of in between the two, right? So nothing too dramatic, kind of a flat month. It kind of went up and it went down and went back up and kind of down, and nothing really too exciting other than maybe capitalizing on those purchases when they were kind of going down. So the next thing I kind of want to quickly talk about was the TD's world's most shorted bank stock. Now, obviously, this is probably what's hurting the stock the most, being in the low or high 70s now. So the only thing the only thing I can really think about as to why this is kind of happening, because everyone's betting against TD right now, is that they have exposure to the U.S. Or quite a bit of exposure to the U.S. and they're also in the current acquisition. I think it's called First Horizon, which is a bank in the United States as well. And so I'm guessing that people are betting against TD right now, and obviously why they're shorting it. So I think it's because of the U.S. market currently. So personally, I feel like with how the Canadian banks are regulated, I'm pretty confident that there's still going to be no problems. So I'm really curious to see the outcome of these shorts. Like it could make that we got these stock prices at a good dip, and then they're going to bounce right back up after these shorts expire or whichever. So it's going to be kind of interesting. But again, TD Canada Trust is like a hold for me until retirement, unless there's like some like major red flags as to why we need to get out of TD. But yeah, so I'm just taking the opportunity to be buying these particular stocks right now. But again, sticking to my plan, I don't like being over that 5% mark. So it kind of hurts me a little bit this week to not buy TD just because of how cheap it is. And I fear like in the next 2 weeks, it's going to be back in the 90s and I missed out on the opportunity. But it's always 50-50, right? It could go one way or the other very easily. So I potentially could have saved myself because maybe it's going to go down to the 60 mark. You just never know, right? So the last thing I also just kind of want to highlight on as well here is that there's the Chinese and Saudi Arabia getting closer to the potential of switching the oil purchases in, I think it was Chinese currency. So I've done a lot of reading on this. I don't exactly know what to believe. I'm not a genius when it comes to currency or all these things, so it was kind of a little bit of a learning curve to me to see on how this could affect the US. Everything I can kind of conclude, and of course it's kind of just taking everything I've read and just trying to come up with my own conclusion. I can't really see much coming from this. A lot of the things I kind of read is that it's more of kind of a bluff potentially. I don't know. I could be absolutely wrong. I don't actually know. This is just my own opinion. But I don't think there's too much to be concerned about, because again, if anyone who's watching this and understands currencies way better, like I said, I'm not a genius when it comes to any of this kind of stuff. So there's a lot of reading online about how like the U.S. currencies, being the world domination, isn't necessarily just backed because it's oil purchased or whichever, or the world currency, it also has factors in like military and all these other factors as well. And lots of people are saying, well, this isn't going to happen because no one's going to trust the Chinese currency in regards to oil purchases and all that kind of stuff. So yada 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 yada. So like I said, the only thing I could really conclude is that because there's always talks about, well, should we be getting our U.S. currency back to Canada, or should we be buying it in a different currency because the U.S. currency is going to drop? And I'm just holding the ground. I'm not making any changes. I'm sticking to my plan, and we'll just see what kind of happens, right? All of my money isn't in the U.S., so if it does, tank a bit because of whatever this potential outcome is, yes, a portion of my net worth will go down because I do own U.S. equities. But that's just kind of the game. I personally don't believe much is going to happen. Also, too, normally when news like this comes out, like the stock market typically like reacts like crazy, and I didn't see anything like massive. So I'm kind of concluding like the rest of the world is also thinking the same thing, because typically when you find out about information and then you want to act on it in the stock market, it's already too late. Like it's already been corrected. And again, if people were very concerned about this, like the professionals, the people that actually know how this is going to play out, I think we would already be seeing the repercussions of that. And I'm not. I haven't seen anything crazy like this last week's update. We were basically flat on the returns. So again, I don't really see much happening. But anyways, that's kind of my update here. I'm also kind of attempting to start kind of a little bit of a DIY kind of beginners course as well on this channel. So I'm hoping to kind of get some content, and I'll hopefully be releasing in the next little bit. Definitely let me know in the comments below if there's anything specific you want like me to touch on. Maybe I can definitely share my own insights and my own experiences as to what I've learned over the DIY kind of journey. But yeah, so like I said, definitely leave a comment. If you haven't already and you want to see these future updates, definitely hit that subscribe button. I hope you guys have a great long weekend, and I'll see you in the next one.